Selling a business is not selling a pair of sneakers. You can't just put a circular out there, hang a shingle, wait for the phone to ring, blast an email list. There has to be a lot of thought. It has to be tactical. It has to be proactive. And it has to be done the right way to get the right outcome. I'm Arthur Petropoulos, managing partner here at Hillview Partners. We're a middle market, lower middle market investment banking, M&A, and capital advisory firm, helping companies generating $1 million to $10 million a year in pre-tax earnings or EBITDA sell their businesses or secure capital. So in today's video, we want to talk about 3 particular elements or concepts relative to selling a business the right way. As we mentioned, selling a business is not just an exercise of blasting the universe with a thing and dumping it on everybody's desk and saying, hey, you do the work and let us know if it's of interest to you. In order to get the right outcome, particularly for businesses of the size and complexion that we work with, so sub 10 million EBITDA, typically non-sponsored, so companies owned by families, entrepreneurs, small groups of investors, in order to position those companies the right way to the right parties, it takes a certain level of tact and a certain level of strategy. And in today's video, we want to talk about the 3 things we like to highlight when positioning a company. So first is going to be what we talked about in last video, and we'll put up a thumbnail here. It's kind of the tripod, if you will, of business valuation. So that's going to be fundamentals, access, and capabilities. The EBITDA generating power of the business, the access or who it serves and why it has a specialized customer base, and what its capabilities are. What's proprietary, special, what's its edge, why is it unique, why can it make prices instead of take prices? So if you think of 3 ways of selling a business the right way, the first is going to be having the right narrative. And so hitting those 3 topics, it'd be hard not to have the right narrative. Now, the next evolution of selling that business the right way is seeing in the market where there are missing puzzle pieces. And so what we mean by this is if you can define your business from the perspective of fundamentals, access, and capabilities, you say, we have specialized access to this customer base. Again, demographics, geographics, industry. We have these capabilities in terms of doing something faster, more efficacious, or unique versus the competition. And then you map out the whole world. So we map out the entire world for whatever particular industry we're talking to when looking to sell a business, for instance. And so if we say, okay, it's a company that manufactures or distributes these types of products, well, who's doing it all over the country? And is anyone missing this geography? Is anybody missing this capability? And again, so if you highlight the access and capabilities of the company you are working with, or that we are working with, and then you look at the mapping of all of the large competitors and you do your research and say, okay, well, here are the top 100 companies that are in a similar space. Where are they missing a puzzle piece? And if you can slot the business that you are working with into the missing puzzle piece or missing slot for the company you are discussing, there's going to be a meaningful amount of interest. And that is what creates the momentum and the interest level, if you will, to generate outcomes that purely selling something by throwing it up on BizBuySell or whatever is definitely not going to generate. And so the third progression of this concept, and we'll get a nice visual here kind of showing steps up here. So the first of these being the narrative of fundamentals, access, capabilities, stepping up to the mapping of the world of the missing puzzle piece concept. The third concept you're really going to focus on in selling a business the right way is called buy versus build. And so what do we mean by this? If you're a mega large strategic company and you're on the other side of the table mapping out the world of all of the services and products and offerings that you provide to your customers, you are likely looking at the other side of this and saying, okay, here's where we're missing access. We don't cover this geography. We don't serve this demographic. We don't hit this industry. And you say capabilities, where you say, look, we serve so many clients, but wouldn't it be great if we could provide this service? Wouldn't it be wonderful if we could provide this product? And so in each of these things, most strategic companies are contemplating doing it from ground up. Well, let's plant a flag in that state. We'll send in some salespeople and we'll try to build it from ground up. Hey, let's hire somebody who knows how to provide this service, manufacture this product, and let's start at ground up and try to sell it into our customer base. But what those large companies tend to have is capital. What they don't have is access and capabilities. And so if they are going to trade their resources, time and capital, to build out that access, build out those capabilities from the ground up, you can usually position a company in a way, if you are selling a business, to say, look, you are going to build it anyways. Why not just buy it? Why not acquire it? Get way ahead. It makes it a far less risky scenario. 90% of businesses fail within the first 10 years, but 95% of businesses that already exist 5 years from now. There's some statistic like that. I'm fat fingering all of the words here, but the point being is if something is in momentum, if it has some level of inertia of operating successfully, it's likely to continue operating successfully. And so the idea is to sell a company the right way. If you position it as the missing puzzle piece that allows somebody to buy something instead of build that thing, that's where the magic happens. That's where price now becomes a comparison to the acquirer of how much it was going to cost to build it up, what risks they were willing to take building it up versus just buying the proven commodity, buying the thing that's already beyond that level of doubt, if you will. So that's a thought for today. Selling a business the right way, it's really 3 steps to it, or 3 progressions, if you will, of the narrative of the business. The first being a well-rounded narrative of fundamental access and capabilities. The second being a mapping and understanding of where this is the missing puzzle piece. And the third being how this can be advantageous to acquire or buy versus build from the ground up. And so again, we're going to flog a dead horse here, but step 1, narrative. Step 2, missing puzzle piece. Step 3, buy versus build. If you can position a company this way, which we do with every company we bring to market, whether for selling or securing capital, if it can be characterized this way, typically you will be able to extract the optimal terms from the market. And so that's the thought for today. Hope the week finishes up well for everyone. Keep pushing forward. God bless. We'll see you next time.